Welcome back to the jobs report today. Well, today, after the stock market open, we'll be covering the jobs report within the next 4 minutes. Pretty exciting. We've also got, quite frankly, a skyrocketing here on Meta. Look at this, 17. Excuse me there. Okay, there we go. 17% on Meta. This is pulling up other sympathetic stocks, if you will, like Pinterest up 5.1%, Snap up 6.1%, solely off of Meta's results. Amazon up 7.4, Google's up 69 basis points, Tesla, of course, down 65, can't be part of the party. But then again, it did get recalled. So what are you going to do when you have a big old 300,000 vehicle recall at the top of the Wall Street Journal? Well, obviously your stock's got to go down. Darn software updates, but that's okay. What's up, Steve? Welcome. Thanks for being a member. And a course member. So what do we got else in pre-market here? So pre-market, purple's down a bit. Look at that, 3% on Apple, though. Wow, 3% down on Apple after the lower than expected China numbers. We've also got, let's see here. There we go. We've also got, I want to get the forecast on the jobs report so we can get set up for jobs. And then get into covering some of the other news. Last night, by the way, I posted a COVID video, and what's so interesting about it is I got some emails and contacts, people replying. They're like, yeah, this, here's more research, and it's so interesting seeing people's research on it, and they're like, that was it. So I might end up making another video on that, but somewhat interesting to sort of revive that discussion. And people are very enthusiastic about sharing insights on it. So anyway. Then we've got, SMCI, really? Let's take a look at SMCI. SMCI, this one's just been kicking butt. Yeah, look at this. Up 2.8%. Nice mover as well. And remember what Meta told us yesterday, continuing to expand the data centers and the AI, both AI and non-AI data centers. And I think the non-AI part is certainly helping out on a super microcomputer, which provides a lot of server racks and equipment and embedded hardware for these data centers. So jobs report that we're expecting today is 185,000. Personally, I actually don't think it's going to come in particularly soft. I actually think it might come in a little stronger. The only reason I think that, the sole reason I think that, is I'm just following up on the good old JPOW. JPOW, in my opinion, probably already had access to the data, and so my guess is we're going to end up with a either at expectations or slightly stronger jobs report. I'd be surprised. I think it would be odd, and it would sort of imply that JPOW didn't have access to the data if we ended up getting a weak jobs report today, and then a JPOW the way he was 2 days ago, which was definitely more in the hawkish direction. So I'll find that to be very interesting. But I guess we'll find out within about the next 30 seconds or so, and then of course we'll get into the BLS jobs report. So everyone buckle up. We are getting ready to go. 185 is what we're looking for. Okay, holy crap, I knew it. 353, massive beat. Freaking JPOW, he knew it. JPOW knew it. Oh my God. 353,000. Unemployment rate goes down to 3.7. What? Average hourly earnings come in at 0.6. Must be some start of the year wage gains there. Holy crap. That's pretty insane. You've got labor force participation that actually comes down a notch at 62.5, but that jobs report came in about twice as strong, and the change in non-farm payroll for revisions, 216 came in, we had 216 prior, ended up coming in at 333. So like this massive over 100,000 jobs revision. This is just absolutely insane. I don't know if this is like, oh hey, we're starting out January and all of our data is resetting, or what the hell this is, but this is absolutely crazy. I mean, that's not even close. I guarantee you J. Powell had this information. There's no way he didn't. That's why we got a more hockey J. Powell, and that's why they kicked the can down the road on rate cuts for March. This solidifies it. Let's listen to his reaction here.
COVID, all the way to when it started, the high was 3.6. It's 4.5. 4.5 is the highest level going back to February of 23. If we look at the average work week, 34.1, that is a drop. It's been at 34.3 or 34.4 going all the way back pretty much to beginning of last year. So
yeah, all right, this is crazy. Look at that. 253 again. The expectation was 185 expected, and then the prior was 216, and we got the revision at 333. This is crazy. Unemployment rate remained at what says, oh, but the expectation was 3.8. I get it. Okay. 3.8 expected. Okay, job gains occurred in professional and business services, healthcare, retail, trade, and social assistance. Employment declined in mining, quarrying, oil and gas extraction. Okay, this is insane. Changes to the employment situation. Establishment survey data have been revised. Revised. Big revisions. Okay, here we go. Of the annual benchmarking process and the updating of seasonal adjustment factors. Also, household survey data for 2024 reflected updated population estimates. See notes at the end of the release for more information. Okay. So, what do we have here? Here are the notes. Effective with data for January 24. Big old change in the way the data's calculated. There you go. Good Lord. This is, I guess, the way the world's going to work, huh? Effective for January 2024, population estimates were incorporated into the household survey. Population estimates for the household survey are developed by the Census Bureau. Each year, the Census Bureau updates the estimates to reflect new information, assumptions about growth of population from a base year. The change in population reflected in the new estimates results from adjustments to net international migration. Okay, got it. Yes. So, immigration is why all the numbers changed, I suppose. In accordance with the usual practice, the BLS will not revise the official household survey estimates for December of 2023 and earlier months. However, to show the impact of the population adjustments, Table B will show the differences in the December labor force series based on the old and new. Okay, so we'll take a look at that. The adjustments decrease the estimated size of the civilian non-institutional population by 624,000. Adjustments decreased the estimated size. The number of people not in the labor force decreased by 326,000. The unemployment rate, employment population rate, labor force participation rate were unaffected. Data users are cautioned that these annual population adjustments can affect the comparability of household data over time. Yeah, but that's okay. All right. So, this is suggesting what? A down? I don't understand. Okay. This December to January change is calculated by subtracting the population control effect from the over-the-month change in the published. This is freaking nuts. That's all I know. How are you possibly supposed to pay attention to this data when you just get these crazy changes? In January, the unemployment rate was 3.7%. Number of unemployed people, little changed at 6.1 million. Among worker groups, unemployment rate for adults, 3.6%. Whites, 3.4%. Blacks, 5.3%. Asian, 2.9%. Hispanic, 5.0%. Long-term unemployed, those jobless for 27 weeks or more, 1.3 million. Little change today. Labor force participation rate, 62%. Little change. January, the number of people employed part-time for economic reasons at 4.4. Little changed. Okay, the number of people not in the labor force who wanted a job, 5.8 million, little change. Okay, so little changes over and over and over again here, except the numbers come in crazy here. So 2023 average was 255K per month. January job gains occurred in professional business services, healthcare, retail, trade, social assistance. Okay. Professional business services, 74,000, considerably higher than the monthly average of 14K. I mean, this is considerably higher than all the, what's it called? All the worries about layoffs, that's for sure. Holy smokes. Okay. January healthcare rose 70,000. Retail trade rose 45,000 in January. Little net growth in 2023, though. Okay. Social assistance up 30,000. Employment and manufacturing up 23,000. Government employment continued to trend up 36,000, but that's below the average of 57. Employment in IT up 15,000. Mining and natural gas declined by 5K. January average hourly earnings. Holy smokes. I mean, this is probably your start to the year pay raise or something. But anyway, 19 cents or 0.6%. In January, average hourly earnings of private sector production non-supervisory employees rose by 13 cents or 0.4%. Average work week for all employees on private non-farm payroll decreased. That's interesting. Average work week decreased. What kind of report is this? Holy smokes. Establishment revisions. Establishment data today have been benchmarked to reflect comprehensive counts of payrolls for March 2023. Okay, drive, blah, blah, blah. Seasonal adjusted. Yeah, okay, whatever. Here, January, December 23, fine. Here are the revisions. What? Yeah, so these are the revisions. So look at this. December was 157, and we got a 115,000 revision. What? Wow. Okay, I got to see what the suits are saying about this. This is absolutely crazy. Okay, so, wow. 10-year treasury yield up 11 basis points. Okay. Let's see here. Here is the NAS. Gold Qs for you. Yeah, this destroys. This should destroy any hope of a March rate cut. Which yesterday I think we were at 70%. So that's going to go down to like 0 real fast. Okay, so this is crazy. Okay, U.S. unemployment report for January. BLS says payroll report increased by an average of $255 a month in 2023. Household survey shows another decline in employment. The drop was 31,000 after a huge 683,000 tumble in December. So the two series are saying different things. Yeah, well, we've heard that nonsense before. Okay, that must have been the negative that we saw down below. Okay. So household was negative 33K. Remember, that's how many people have a job. And then payrolls, so the establishment is how many jobs do employers say people have. So in other words, hey, how many people have a job at your firm? Oh, this many. Calling households, you potentially double count when you call the employers, whereas you don't necessarily double count if you call people. But anyway, so the survey that does risk double counting, that's the one that came in at 353K. I guess I should put a little plus there. That's wild. Okay, so yeah, today's employment report takes the March cut off the table. No kidding. Though the household survey showed another decline. Yeah, we read that. Despite the surprise and strength in payrolls and participation rate, weekly hourly earning or hours worked ticked down to the lowest level since March. Oh, that's interesting. Lowest hours worked per week since March 2020. Wow. Okay, interesting note. Highest estimate in the Bloomberg survey was 300,000, and even that person got blown away by like 15%. Odds of a rate cut at the March meeting are now just 20%, with still 5 for the year. 20% for March, 5 for year. Both December and January are actually stronger than expected. It's quite a set of numbers. Well, yeah, no kidding. Revising up December wild as well by 115K. This is very far from recessionary territory. Yeah, no kidding. Holy crap. 2-month net revision is positive, not negative now. Wage spiked on the month and the year, both all above economic expectations. Rates immediately spiked. Everybody's just like blown away by this. This is wild. See what else here. Payroll shock Royals assets. If Powell had failed to persuade punters that March was off the table, this will certainly help. And a huge payroll surprise will have knock-on effects on a lot of asset prices as a spike in yields pushes the dollar higher. Yeah. Okay. Powell's pushback on March looks totally justified. Duh, because he totally had this data beforehand. That's so funny. Right before this came out, they're like, weakness in cyclical hiring is reason for concern. Hiring has been steadily falling. Yeah. Oops. This is crazy. Okay. Let's see what some other folks are saying, because this is just nuts. This is just wild. Gold down 1%. Payroll is a 4 sigma beat. Oh, no. Not a sigma beat. No. Who remembers Vlad, the Impaler of stocks? We had a 5 sigma beat. Yeah, I had to do that. Apparently it comes with a Trump voice. I guess it depends on the morning. Okay. Wow. We really need to look at this a little bit more in depth here. But I want to see what some more folks are saying. Okay, so let me write that down. 4 sigma beat on jobs data. Blew away every estimate. Okay, no longer fully pricing in a May cut. Wow. Okay, 20% rate cut for March. Rate cut for May, starting to unprice. Wow. Higher for longer was right. I like how Nick T is almost like distancing himself from this a little bit. The U.S. economy is reported to have added 353,000 net payroll jobs in January, and revisions for November and December added another 126,000. That's crazy. Via payroll. Calling employers. Okay, yeah, and then remember, negative 33K job gains, job losses in that case, via household. So calling employees, potentially double counting on payrolls. Okay, so this is nutty. Okay, average hour, yeah, the average hourly earnings just smoked as well. Average hourly earnings, 0.6. We saw that. That was month over month. And the expectation was 0.3. And then average hourly earnings, 4.5% year over year, with the expectation at 4.1%. Wow. Some people just tweeted, LOL. Oh, that's actually really funny. Okay. Wow. Look at the NASDAQ already start recovering. They're like, you can't stop our party. Okay. Wow. So, next, I want to see... So, this is... let's throw this on eHack really quick. We'll just call this, what? Jobs, report, and morning news. Okay. So then we've got wow. Okay, I'm just blown away. Okay, continuing with what the suits are saying. Going back to something Powell said on Wednesday, he thought that rather a re-acceleration in inflation, the bigger risk was from inflation holding at a too high a level. I wonder how this report might affect his assessment now. Yeah, well, he already knew about this. Gold. Why is gold dry? That's interesting. Oh, because of the unwinding of recession fears. Oh, how interesting. Yeah, look at that. Gold down about 73 basis points. 10 years up like 12 bips right now. The 2 years up 16. So now we're going deeper into inverted territory. Deeper into inverted territory. 4 basis points. This is so crazy. Okay. Okay. Traders sharply pared their expectations for a rate cut in May and are no longer fully pricing a quarter-point reduction after stronger than forecast jobs data for May. Rate cuts priced in. So, rate cut bets for 2024. Yeah, okay. So I have a little charty doodla we'll throw up here. Oh no, maybe I don't. Oh, there we go. All right. So, wow. Kind of curious to see what some of y'all are saying in the comments. I'll pop over there in just a second. But let me get this chart up. And this is going to be where you could see it. Okay. Chart. All right. Here we go. Just threw that up on eHack. So basically, this shows you the lower. I guess I should have put a better screenshot in there. I'll fix that. But basically, the white line shows you the rate cut estimates for May, and you can see we were sitting there at about negative 25 basis points, so that rate cut was priced in. And you can see how quickly it sort of jogged up there to indicate sort of an unpricing of even May. So I would say May's jog up on the right of this chart. White line shows the unpricing of May's 25 BP cut. There we go. That's a little cleaner. Okay. Wow. Wild. That's very shocking. So then we have, let's finish this on Tesla quickly. We started off with Tesla. We have China delivery. Okay, so we got a recall on the steering column. Recalling 2.19 million vehicles for software update on steering column. Big deal. Okay, then we've got. We already talked yesterday about how Volvo stops the Polestar funding. What else? Let me see here. Let's see. Okay, yeah. So there was a price cut as well on the Model Y only in Canada. Model Y in Canada reduced $4,000. And plus, wow, that's wild. It comes with $12,000 in rebates if you live in Quebec. Wow. Very, very cool. Okay. So let's listen in here for a moment.
Powerful report. I mean, this, I saw every prediction of 175, 200 maybe was optimistic. Now we're at 350 and the consistency of it. So we should take it as a positive report, but we should understand what really is driving the pain for many Americans. And it is, I think, inflation when it comes to housing and the cost of a basic necessity of life.
Yeah, that's certainly something that one of the pieces of the puzzle trying to understand this upcoming election, Mark, because you would think that the president's numbers among minorities and people benefiting from things would be at historic levels, and that's not the case. It's constantly pointed out that if it's former President Trump, that his numbers have actually been increasing, where it doesn't follow with what you just described to me in terms of
I always
why.
tell people it's dangerous to read too much in early polls. If you followed early polls, Obama would have been beat, Clinton would have been beat, George Bush 43 would have been beat. These early polls, I think people in politics, we all follow them. But what will count is where this election is come August and September, when people really kick in, when campaigning and advertising begins. But
boring. Let's look at Nick T here. Benchmark revisions show the 3-month average for the private sector payroll growth was 176. Wow. Wow, look at that revision. That's pretty wild. Well, I mean, and it's good to some extent because it's not a recession, right? But wow, I mean, just how freaking wrong everybody was, the forecasters. And oh yeah, and then Jay Powell's got a 60 Minutes interview Sunday evening coming out. I guarantee you he talks about the strong jobs data, and that's how you knew that they already knew because, well, he did. And, you know, now we can actually talk about it on Sunday. I don't know. It's all a game. It's crazy. What a crazy game. Okay. Here's a comment. It's impressive stock futures are hanging in there. Still up 30 basis points on the S&P 500, despite a 15 basis point surge in the 10-year. Yeah, no kidding. Well, the Nasdaq's boopy-doopling around here a little bit. But, yeah, let's look at that. Here's your Nas. SMCI gave up a little bit. Apple down a little more. Nvidia 1.5. Wild. Trade Desk up 3.2. Meta still up 17%. Holy crap. 666 on Amazon. Tesla's red because why wouldn't it be? FICO, wow, on that, it likes that jobs data. Well, actually, no, it didn't move much here in pre-market. It was just, well, oh, I don't know if it's showing us pre-market. It might be showing us yesterday. I don't know that FICO trades enough to actually show us pre-market, so that could be yesterday. Bitcoin, how did Bitcoin react? No real reaction here to that rate move on Bitcoin. Okay, on the basis of today's jobs report, there's absolutely no sign of a softening labor market or weakening wage pressures. It wasn't just a strong January. It turns out the previous months were stronger than initially believed. Throw in the sharp move higher in average hourly earnings, and the Fed must be wondering if their rate hikes have had any impact. Wow. Yeah, no kidding. Okay. Let's see here. Trader sharply paired expectation. Yeah, we know that. Okay. Hiring was broad-based. Diffusion index rose to 65.6%. That's just a way of saying, you know, which sectors gained. You know, when it's highly concentrated, you get worried you're getting closer to a recession. This is very interesting. Yeah, I see a lot of political. I'm just gonna say it from a neutral point of view to sort of just report on it. But there are a lot of people that are like, "Okay, Biden." I mean, I'm not that jaded, But then again, maybe I should be because this number was freaking crazy. Hey, whatever, man. Just, I don't care. I'll cover it, whatever it is. But wow. Okay. I'm gonna steal Nick T's piece here and say Nick T posted this chart showing revisions versus initial estimates. They're actually pretty in line with trend. Generally in line, except for today. There's got to be some massive recalculating going on there in how these numbers are calculated. It's just kooky. Anyway. You know, there was an interesting Gen Z female versus male divide, by the way. I don't know if it's worth making a video on, but it's basically talking about how females in Gen Z are becoming a lot more left-leaning, and males in Gen Z are becoming a lot more right-leaning. And there's this concern that that is basically going to make it very difficult for people to have more babies. I don't know. Has anybody experienced that? So, wow. Can't even trust the data, says someone. BTC dropping, is it? Let's go to the 1 min. Yeah, it was on the day chart. Oh, yeah, you're right. I should get off the day chart there. There you go. A little bit down on the risk assets. 4 more years for Brandon. Okay. Give me that Charizard. Who's Nick T? Nicky Leaks. It's Nick Dearmouth over at the Wall Street Journal. Yeah, I forgot I was on the day chart. That's my fault. Let's see here. Let's see some of your comments. Damn, gonna make it harder to date. I am Gen X, but identify as Gen Z. That's a good one. No, it's always been women more liberal than men. Well, I mean, they show that. It is true, but it's getting, like, the spread is getting worse. Like, it's literally like, if up is liberal, right, and then men are here, it's always kind of been like that, but all of a sudden you're getting this, and like this spread's happening. Yes, wow. I'm not gonna post that one. Yes, for sure. I'm Gen Z, totally agree. 100% super glad I was able to find a conservative girl. Which is funny because it reiterates the male thing. Tyrone. I swipe left on all liberals. Okay, see, I don't... Which one's which? Is left reject? Hold on, I gotta ask. Is swipe left reject? Swipe left means to reject. Yeah. Okay. Can't trust the numbers. All the boys listen to Andrew Tate. I think there's a plus and a minus on that. It's probably not good for dating women to listen to Andrew Tate too much. It's good for work motivation. I don't think it's good for dating. At least from my anecdotal experience seeing what other people react with. Liptard girl or the worst? Wow. Taylor Swifties. Nah, I'm married to someone opposite side of the aisle. Okay. There are a lot of reasons why. Women are attracted more to conservative traits than men. Interesting. My wife is more conservative than I am. Okay, so you get a little bit of everything here. This is very interesting. Palladium futures. I don't know anything about commodities. SPY is... Oh, did the SPY finally go red? Yeah, NASDAQ kept going down, so... Do I have the SPY here somewhere? SPY. Yeah, there we go. Very interesting. Everybody's very interesting. Maybe we should make a video on that. Everybody seems very interesting. It's the abortion issue causing that? Oh. I don't know what you mean. The the right to abortion. Oh. Yeah, you might be right. Oh, that is very interesting. Right. I'll write that one down. Abortion issue. Yeah, that might be. Because of our colleges? Well, both men and women go to colleges, right? Okay. Oh, yeah. Okay. Yeah, by the way, we're working on building the eHack app, so it's going to be pretty funny. Run a poll. I'm nervous. My wife thinks she's conservative, but always echoes leftist views. Interesting. Girls tend to lean more right when they get older, I believe. Interesting. Not okay. All right. These are some fast. Yeah, free eHack app. What is this? Whenever I listen to Andrew Tate, then I get drunk. I always end up regurgitating things he says and getting into an argument the next day. Yeah. Okay. So, good Lord. That doesn't surprise me, especially if you're talking about having an argument with a woman. I think you're always going to end up in an argument after listening to Andrew Tate. And if you're talking about being motivated for work, you're probably good. Hey man, let's go grind today. Yeah, man. Say the same thing to a girl, might not work as well. Okay. So, no, obviously there's a lot more to that. I'm way oversimplifying. But anyway, yesterday, Atlanta Fed GDP tracker for the first quarter ticked up to 4.2. No. You gotta be kidding me. This is insane. The rates are not affecting this economy at all. J-Pow's gonna be crying here. What do we do? What do we do? All right, let's look at this. Holy crap. Oh my God. This is insane. Okay, so, all right, okay, what's going on? Okay. Oh, okay. All right, there we go. What is going on with this keyboard? You know, if I didn't have a Windows computer, I wouldn't have this freaking problem. Where's Steve with the Dell? I can't push buttons on my keyboard without everything collapsing. I disconnect it and reconnect it. It's stupid. There we go. Okay, I had to unplug it and plug it back in. Yeah, okay. Okay, yeah, that makes sense. Okay, oh, bro. This thing is so stupid. Atlanta Fed GDP now. There we go. All right, Atlanta Fed GDP now. So what do we get? We get 4.2% up from 3.6%. No, it was 3.3, right? Hold on a second here. Oh, yeah, and negative 3.3%. So here, the nowcast of first quarter real personal consumption growth and first quarter real gross domestic product investment growth. Okay, so real personal consumption in the last 3.6% read, it's worth breaking this down, I think. So if we break down the 3.6 was made up of personal consumption. So this is real, so it's inflation adjusted. Inflation adjusted personal consumption up 3.6%. Oh wait, that's how they got to the 3.3% read. I understand. Okay. And then inflation adjusted gross private domestic investment down 0.3%. That's how you get the net 3.3 in the prior report. And increased to 4.9 and 1.7%. Wait, but that doesn't average up. Well, the nowcast contribution decreased. Oh, okay, so a different weighting there. That's bizarre. 4.2 on Feb 1. That's before the jobs data. Wow. That's very, and you get a seasonal adjustment in there as well. Okay. All right. So remember, this Atlanta Fed GDP research here, A, it doesn't include the jobs data. from today, which is crazy. And B, it was accurate in Q3. In fact, I wonder if I could go back even more than that. Let's go to Atlanta, Fed, GDPNow forecast. I wonder if I can track it and see how accurate it was. Okay. So now I'm going to add data, and I'm going to add GDP. GDP. US price index. No, I need the year-over-year number. GDP. See, that would be interesting if I can pull that up. I think I can. US GDP. Oh, I can't chart it. What a frickin' ripoff. GDP. Okay, I'll just try quarter over quarter. No, not really. Okay, well, whatever. I can look at the Atlanta Fed over time here. And in Q3, the estimates were coming in that GDP was growing like 5-something%. And then we look at, I remember in Q3, we were looking at like, what? 5.3%? Are they smoking, whatever? And sure enough, it was right. And so now you have the estimate sitting at 4.2%, trending up, not including the jobs report yet. This is just after the ISM report, business report survey we got. Does not include jobs Friday. Okay. Well, I guess JPOW doesn't have to worry about causing a recession. But goodness gracious. Let's see what they're saying over here.
Did anyone say they didn't like it?
I don't think so.
I was talking to Tim about when I take my contacts out. Okay, so when I take my contacts out, David, and when I see you're true of Sarah. Is that Sarah? No?
No, Dad with iPad. Dad with iPad didn't wake up early enough to get the report. But Dad with iPad, no, it wasn't 300,000 healthcare workers. It was actually very diverse. I mean, it's everything. It was IT, different parts of business. It was incredible. How much of an anomaly is the U.S. economy compared to the rest of the globe, and how long can it be sustained? Well, that's the question. That's exactly right. Trueflation, yeah, Oh, did it go down even more? Wasn't it like 142 yesterday? Pretty sure it was. And everybody was sort of... Usually that one, by the way, is somewhere around 0.5% too low. Yeah, yesterday they were showing it sitting at 1.44. Today they're showing it sitting at 1.34. Now, the only thing that I can really say... Why do you think typically recession comes after inversion goes positive? Well, we can talk about that in a sec. But why? Where was I going? Dang it! I shouldn't have read comments. Whatever. Here, let's go to Trueflation and we'll reconcile this. So this was the Trueflation, and let's go to. Oh, okay, stop it. No, behind the paywall. Anyway, so. You could actually honestly just look at their Twitter. So this is the Trueflation report, which I think is usually about 0.5% too low, but it's sitting at 134. And this, in my opinion, is very consistent with what we're actually seeing across the earnings calls, really across the United States. As I'm reading corporate earnings calls, you're seeing this getting past sort of the bottom of sales pain, but you're seeing no real appetite for raising prices. Market open. There we go. Which is good because it means we're not pushing, like, these jobs reports aren't necessarily driving inflation, or these stronger economic sets of data like GDP aren't necessarily pushing us towards recession. Now, as far as the bond market, we're up 14 basis points right now on the 10-year, and the 2-year is sitting up 19 basis points. So we're going further into recession. And the question in the chat is, why is it usually that when we uninvert, which, mind you, we're like doing the opposite right now. We are going deeper into inversion right now. So I should put that up maybe. 10-2 yield curve. It's crazy because it's like we were so close to uninverting, and now it's just going right back into the hole. And it kind of has been as we've been getting data over the last, I don't know, probably all of January, frankly. But here, we'll go to eHack really quick and you'll see it. eHack.com. And look at this chart right here. There's your inverted yield curve. So why does the yield curve usually uninvert when you head towards a recession? Because people panic about the short term. And when people panic about the short term, they look for a short-term safe haven. So they might be more willing to buy up basically the 2-year. And if you buy up the 2-year, then the price of the 2-year can drive up. Yields of the 2 come down. And they're supposed to come down substantially, right? The 10-year is supposed to be indicative of longer-term growth in the future. So if the 10-year stays at, let's say, 3%, because we think in the longer term we'll have 3% GDP growth, and the 2-year plummets to like 1%, well, then you've got a very straight, sort of normal yield curve, an upward-sloping yield curve, and it's because in the near term people are looking for that shorter-term protection. That's one thesis. I mean, there's so many more things that go into why people are buying bonds. This is extremely oversimplified. But, yeah, anyway. So, yeah, okay, cool. So, okay, we've got a few things up here on eHack. You're welcome to check those out. But, boy, I want to keep studying what the suits are saying here because it's just like a remarkable day here for I mean, it's great for the economy if the numbers are accurate here. The 2-year yield jump is the biggest since March, but having said that, it only brings yields back to roughly where they were after the JOLTS data on Thursday. So while this feels like a huge shift, it's not a massive outlook to the it's not a massive rewrite to the outlook. Okay. That suggests traders still don't see a massive shift in average rates over the next few years, but they do expect rate cuts to start a little later. Yeah. Okay. Why hours dropped a lot is so weird too. Wage growth firm, but hours work dropped. Yeah. Nobody really has an answer for that. Okay. Okay, what else? 10-year yield, biggest daily gain since July. Wow. That's so crazy. So the 2-year biggest jump since March 2023. 10-year biggest jump since July 2023. That's nuts.
Zuck's insider selling, which if he really thought this quarter was going to be a problem, why would he have sold then? Right? Does it negate that as a tell?
I have a view on that. I don't think he knew how big the rate bands were going to be.
You don't think he knew how big what was
The rate bands. The first of the meta
Oh,
products.
really?
Yeah, I don't think he did. I don't think he did.
Oh, they're being so boring. They're just like, as soon as it gets to 6 o'clock, CNBC turns into no fact, all BS. I'm sorry. Like, I'll just flip over to Bloomberg. But I don't know what it is. It's like, as soon as it's 6 o'clock. Like, the 5 o'clock hour is actually pretty good with Becky Quick. And what's the dude's name? You know, the guy who's always grumpy, leaning back in his chair a little bit. I don't know. You know, that guy? Anyway, so let's see. I want to see if I can get a little bit more data while they're a commercial right here. So which button do I click to figure out part-time? God, come on. Here we go. Employed persons by class and part-time status. Okay. So many buttons to click. This is insane. All industries. Part-time for economic reasons. 4.4. That's up like 200K. Could only find part-time work. That's up like 50K. Slack of work or business conditions. That's only up 40K. Part-time work for non-economic reasons down like 300K. And then part-time, why are there two part-times? See, here's part-time for economic reasons, but then here's another, okay, because that's the non-agricultural. Okay, oh, I see, okay. So, yeah, part-time for economic reasons. Yeah, I mean, that part-time number has been moving up. I think I could chart that. I should be able to. Part-time for economic reasons. I certainly can. Okay. Oh, that's incredibly convenient. Yeah. That's not actually bearish. Wow. Are you kidding me? Holy crap. This economy is freaking nuts. Part-time for economic reasons and then non-agricultural. I'll show you these charts in just a second here. This is nutty. Yeah, no, that one's the same. Okay. Wow. Okay. So let me throw this up. So this is going to be a chart that shows you the number of workers that are part-time workers for economic reasons. Non-ag and ag are similar. Okay. So we're just going to paste that. Actually, you know what? Maybe I could throw in part-time for economic. If I think I can actually just overlay the two. Oh yeah, they're basically exactly the same chart. Okay, so that doesn't matter. Okay, so if I now throw this chart up here, you're gonna see it, and I want you to predict, okay? Predict this in your head. Think to yourself, what do you think the chart's going to look like compared to pre-COVID? Are people working part-time more today, or were they working part-time more for economic reasons, because they had to basically, before COVID? So in other words, is there more part-time work today or less part-time work today? Okay, place your bets. Place your mental bets. You don't even have to tell anybody. Just think about it in your head. Okay, let me just give you a hint. My reaction was shocked. Okay, ready? Boom. Less. Look at that. You compare, we're barely getting back to those levels. But you go back to 2018, I guess I could probably pull this back even more, but you're barely just now, like, you were well into this midpoint range over here, in this, mid 400,000 box over here. And you've actually been substantially under that by about 10 to 15%. And you're just now trending back to that. Oh, these are millions, by the way, 4.4 million versus 4 million. You're just now trending back to that. That's wild. That's actually pretty shocking to me. That we're really just normalizing back to trend on the part-time. This economy is something else. Wow. Normalizing back to trend on part-time workers, not necessarily a giant surge. Yeah. I am going to say wow after that. All right, let's listen in here.
In any way, Victoria, to you, good morning, because I mean, there's an exceptionalism in some of these tech reports over the past 24 hours. To you, first of all, March is off the table, but we are blinded by the light of tech overnight.
Yeah, well, I think March has been off the table, at least for us it has been. It's what we've been talking to our clients about for the last few months, is that we never thought the Fed was going to make a move in March, because there's so many different elements out in the market right now that are kind of pushing and pulling at each other. So you look at tech earnings earlier in the week, we actually saw the NASDAQ pull back pretty significantly after Alphabet's earnings and Microsoft earnings. And now we had this reversal here at the end of the week because of Amazon and because of Meta. You combine that with what you're seeing in the jobs report that you mentioned, and you say, wow, look, the economy is really strong. We've got over 300,000 jobs in this report. But at the same time, you can say, but wait a minute, average hourly earnings are up 4.5% year over year. You look pre-COVID, and the average high level was around 3.5%. That could put a lot of pressure on margins, and we can talk about that in regards to earnings. So I think there's a lot of kind of what ifs out in the economy right now. There's some people that are risk on, some that are being a little more cautious. That's what's causing the volatility in the market. But obviously, the last couple days, tech has been the driver of this market.
Look, it absolutely has. And I think once we clear the decks with this week, Victoria, we will begin to look at those margins again. Michael, good morning. I just had Rick Reeder with me. He's marinating over his steepeners. But of course, the backup in yield that you see today is perhaps an opportunity. Is this the kind of action day where we're going to see flow into bonds by the close of business?
Yeah, man, this is actually, as Rick said, not a bad place to be for fixed income investors. You know, interestingly, we've been getting a little nervous and disappointed that we had such a big drop in yields, you know, from 5% last fall to, you know, into the 380s so quickly. And we're concerned that a lot of our clients, who we've been advising, frankly, to leg into the duration trade, continue to leg into fixed income, that maybe missed a big part of the rally. And now this gives us another bite at the apple, right? So our advice has been, you know, you get that 10-year into the fours, between 4 and 4.5, and you're in the buy zone, you know, in the low.
You're in the kill zone.
Mid threes, you're probably in the sell zone. So I think this is actually good that you can earn this yield for a longer period of time.
I mean, look, two very different asset classes that we got to talk about. Michael, you know, today we're fully effusive, fully bullish on Meta, Amazon, etc., and nobody seems to be bothered remotely about Apple's disappointment in China. I mean, 3% is hardly what you call rocking it on the downside. You warn, though, that the Fed could keep us too high for too long. Really?
Yeah, I mean, that's really the big risk over the intermediate term, man. It's in the near term, the economy certainly seems to be firing on all cylinders. I mean, you really have to squint to see the cracks in the system. If anything, we're just going through these kind of rolling sectors that are slowing down. I mean, consumers boomed last year, industrials lagged, and it seems to be rotating the other way this year to some extent. Mm-hmm. But that was predicated on the notion that rates are going to be lower, you know, in the next year or two. And I think the risk is that the Fed is too slow to react. And that's their MO historically.
All right. Well, look, you know, on the way up, it was...
All right. A quick note. I just want to see CPI estimates for the 13th. The Dow chart looks like Kevin's sweater. Shut up. That's funny. All right. Okay. So anyway, yeah, let's look at CPI. So on the 13th, we're going to get CPI. So, okay, it says here CPI. Month over month, 0.1. And then core month over month, 0.3, same as prior. So we'll see what we get, but this is crazy. Again, I just, every day I'm reading earnings calls and I'm like, tell me where the inflation is, so I know to prep for it. But in the meantime, boy, the economy just keeps kicking butt here. Just going back to weather impact. So that likely fed through the outsized gain in wages because unusually severe weather cut back the average hourly work or average hours worked. Still worth noting that January's weather data were freely available to economists before this morning. May not have assumed as big of an impact. I wonder if you can consider or just sort of write off January as weather. I don't know about that. I mean, it's been way, you know, warmer, but that's an interesting. Jay just called me dumb. Amazing video on war crime. Love your view. I agree. Yeah. Thank you for that. Appreciate that. Time to trim it. Okay. Interesting. Okay. Okay, very cool. So let's get a little bit of a look at how some of the sticks are moving here in the AM. So crazy jobs report basically pushed the S&P 500 down flat. But honestly, the fact that I mean, you have to look at this, okay? The S&P 500 is flat with the 10-year up almost 15 basis points. What the hell? Okay, that's crazy. And then the 2-year is up 17.6 basis points. How crazy Okay, so S&P 500 there. NASDAQ up 44 bips. ASML is down 140, 149 up. MCI. SMCI. I always saw this super microcomputer. Yeah, that makes sense. NVIDIA 130. AMD 143. Apple's down 3%. Trade Desk up 2.8. Tesla's down 1.8. Not a surprise. The interest rate sensitives whacked on this. It's like it's just too early, I guess, to bet on interest rate sensitive. Oh well, gotta have balls of steel to make that bet. It'll take forever. One day it'll be glorious, or we'll all be dead. I don't know. Anyway, New York Community, gruesome. 120. We're down 1.22% here on New York Community Bank. This is one to pay attention to, folks. It was down like 39% one day. I think it was 37 when I go to the unaveraged candles. Then it was down 11 yesterday. Here, let me go to the unaveraged. Yeah, 37%, 11%, and then today it's looking like it's going to open down another 1.2%. So you've got a banking crisis brewing at the same time as apparently the jobs market is doing just fine. And Jay Powell had his leaked data and is in no rush to cut rates. Okay. So much for layoffs. Enphase down like 2-something. Meta's up, up there at 16% with Amazon. I really want to watch these on the opening bell. See what happens. I want to see what institutions do because mostly retail tend to buy in post-market. You do get institutions that make bets, obviously, as well, but I do wonder how much big money repositioning is going to flow. And it's insane the disparity that you're seeing between some of these companies that are at like mega all-time highs and some that are just like still in the doldrums. It's wild. Eventually it balances out, but boy, the wait for that is crazy. There was a fun for people that are heavy in stocks that are still on the lower side. There was a fun analogy I saw yesterday. It was also on X. Somebody, oh yeah, here it is. This is you. Oh, Squidward. Oh. All right. Let's get ready for the bell. Banking system is sound and resilient. They removed that. I removed that. Also interbrokerage trades. Yeah. All off exchange, basically, right? It's all ECNs. So, okay. Waiting for El Bello. Feels like a house of cards. I don't know if it's that bad. My Model 3 Highland Edition just got ordered yesterday, but won't be here until March and April. Huh. Let's see. Listen in here.
You taught me to look at, whether it be Visa, whether it be MasterCard. Take a look at the market cap. One of them is AbbVie. Okay, now AbbVie's going to open with the $300 billion valuation, and they're successfully navigating one of the greatest loss of exclusivities in history.
Matthew asked, did this channel change after the reset/shaved head? I think so, and for the better. How does everybody else feel about that comment? Better or worse? Worse.
By the way, Rob Davis doesn't have to do it yet because
CEO
Keytrude is still there. But I know that Mr. Warner at Bristol Myers is trying to navigate a whole bunch loss of exclusivity.
They've done a number of deals recently, as we know,
yes.
AbbVie as well. These smaller, not small, but smaller emerging companies and biotech that will give them future drugs.
And I think that without any publicity, without wanting any becoming a public face for AbbVie, David, that's a very good job, and $300 billion is nothing to sneeze at. It's hard to get to be a $300 billion company.
Let's get the opening bell and the CNBC real-time exchange with the big board. It is brain drug development, also neuroscience. IPO today at the NASDAQ. It is JP Morgan Asset Management. So we had Flutter, we had Amer Sports, Flutter. Now this. Jim, IPO pipeline.
All right, here's the opening. Look at this. Tesla, slight red candlestick. You got the green candle continuing on Facebook, Meta. You've got the green candle on Amazon continuing. Snap, about 5%. Pins, 370. Trade desks up about 1, but still down. Red candle there on Apple. Green, Nvidia. S&P 500, green candlestick. Pushes green. You've got, let's see, what else? Let's look at big losers. Where are the big losers? Oh, wow, look at Enphase. Here go the energy stocks again. Enphase down 4.6. You've got Open Door down 5.7. You've got SolarEdge down 4.6. Your interest rate sensitives moving just like Apple over here, although Apple's not interest rate sensitive. Apple is China sensitive. Fascinating. And when you look at the beautiful green side, it's still sitting 16% there on Meta. Amazon 6.4. Pins up. Nvidia up 1.4. Qs moving 39. Let's look at the actual sticks on the Qs. Not really directionally sure which way the Qs want to go there. Let's see what Suits got, as well as bond market movements right at the open. Still sitting right at about 4% even, 13.8% even there on the 10-year. Drop into the 2-year, you're up about 17 basis points. We're looking for rate cut expectations, which certainly have moved. We're going to see these 17% chance of a cut now, just 17% for March. And then we have a reduction to just 60, it's about 70% chance of a May cut. So you've now got a 30% chance of no cut in May with this data. So big move there. Otherwise, let's see here. We've got University of Michigan sentiment survey comes out at 7 a.m., so that's in about 28 minutes. Not a surprise, or I'm not going to be surprised to see some optimism on that survey. Apple's trying to recover a little bit here. Yeah, look at that, getting that green candlestick there on Apple. You've got Amazon actually hitting the red. Looks like some profit taking there on Facebook and Amazon. You'd think at some point there might be some rebalancing to some of the poorer stocks. Spread some of the wealth, would you? Anyway, so where's New York Community Bank? I'm keeping an eye on those the banks. Okay, it's only moving down 1.3% right now. Not bad. So then we're looking at other news. Let's pop for a moment here. And come on. There we go. Okay. So looking for more data. Exxon well ahead of its plans to double earnings. Good for them. Okay. New York Community Bank fallout opens gap between big and small bank preferreds. Yeah, well, as it should. Home buyers are so frenzied, they won't wait for Canada rate cuts. Okay, this is a risk right now. I think home buyers are making a mistakey doodla. Everybody's betting right now. Like, the home buyers are betting on these rate cuts coming this year, and they think it's going to cause, like, some real estate rally. Just watch the inventory come up, and, ugh. So, like, I've substantially slowed the house purchases with House Hack. And we've increased on multifamily because that's where the deals are right now. It's crazy. You have to pivot with where the deals are in real estate. It's crazy right now. So let's see here. NVIDIA's landlord's going to sell them their offices. Okay, cool. Guess they want their money. Okay. Right. Let's see. So I'll give you the Michigan sentiment really quickly so you have an outlook. Michigan sentiment, we're looking for a read of 78.9 for sentiment. 1-year inflation, 2.9. 5 to 10-year inflation, 2.8. So we'll see what inflation expectations do. It would be glorious to see the inflation expectations continue to trend down while you're getting jobs reports that are this good, right? So we'll see. Q's up 0.5%. Enphase is down. We know that. Apple's trying to recover, trying to get back over its 181 here. Tesla down 1.9, and Intuit down 0.25%. Love to buy that one a little cheaper. So there's actually quite a lot of red here. Cloudflare is even red. What do we got on Cloudflare? We have sitting in that $80 range there. What about BTC? How's it moving on the minute? Oh, trying to recover a little bit on BTC. Nice. Okay. Oh, Google's down 2%. Look at that. Wonder why. Oh, wow. Yeah, look at Google right to the fib. Excuse me. We've got a fib at 137 on Google. Right down. Right down to its Fibonacci of 138. All right. Very well. So let's take a peek at... Okay, that's bizarre.
Even though the law may not be
Particularly
behind those
just so
efforts.
big. I mean,
Well, the reason they're spending so much is because the competition is so fierce.
they are, and that's why they all need the NVIDIA
And the other thing I
cards
keep coming back to, Jim, is the days where the market freaked out on spending on a CapEx cycle at Amazon, that's over.
No, we want them to spend because the leverage is great now that they figured out which person they need. We always figured, like in advertising, like 50% of the people will take an action. Well, we just got to figure out what they wouldn't act on. Like Amazon, whatever they're acting on is working, and they've laid off the people who aren't. When I was talking to them last night, I was saying, guys, would it like matter if I had $1 billion idea for you guys?
Guys, before
I wasted his time. You know, it's like.
Oh, has anybody ever... do y'all ever know what the odds are that the Groundhog's Day groundhog Phil actually gets it right as to whether you're going to have an early winter end or 6 more weeks of winter? Apparently, I guess it's today. Is today Groundhog's Day? Anyway, they had the celebration day, so I'm assuming it's today. Anyway, so Groundhog's Day, supposedly we're going to have an early end to winter based on the groundhog that magically speaks through a stick to his handler, AJ the handler, I guess. I don't know. Anyway, the darn groundhog is right like 30 to 40% of the time. It's like literally a nickel would be right more often than the groundhog. But you know what's crazy is how many people are there for this event. There are like thousands of people who show up for the event. And it's like nobody cares. They just want to see the groundhog. And it's so entertaining. And then they get so mad if it's 6 more weeks of winter and so happy if it's an early summer, even if it's wrong. It's actually really kind of entertaining. Like, it's so ridiculous that I kind of want to go. Pretty wild. Yeah. So, okay. So anyway, all right. Keep going.
the best of their ability, the CFO talking about that in terms of pricing.
If you ever lived in Pennsylvania, you would understand there is nothing to do there. Oh, no.
Maintain EBITDA growth. That's the CFO. There's the CEO, Chris Winfrey, but again, not well received, down 12%, having an impact on Comcast as well. And of course, as we know, the video sub numbers just keep declining pretty dramatically, although less than had been anticipated, but overall, cord cutting continues apace.
Wow. I mean, what a bad business. I don't know. Those are bad numbers, dude. I mean, not
it's
a lot
a free
of
cash flow business. It's not a top line growth business. That's for sure.
Down 11%, worse than today.
Yeah, it's bad.
I mean, worse than like commercial real estate companies, which is saying something. Okay, what's the number one performing stock in the S&P this year?
This year,
Yeah.
number one performing stock in the S&P. It's not NVIDIA. It's up 30%.
Going to be the one that's leading.
Meta just passed NVIDIA.
Oh, it did.
Yeah.
31%.
Yep.
Very close.
All right, here we go. Bad weather. Wait, bad weather. The surge in average hourly earnings in the January jobs report isn't what it seems. Bad weather probably reduced the reported length of the average work week, in turn boosting the hourly earnings calculation. What? All right, hold on. Let's put this on. Look at the cues. They're taking off again. Oh, my Lord. You know, is what it is. Okay, so let me understand this. Earnings rose 0.6% in January, the most since March of 2022, according to the Bureau of Labor Statistics. But average weekly hours fell to an almost 4-year low, likely due to a large number of people who are unable to work as a result of bad weather. What's important That's important because according to the BLS handbook, average hourly earnings, excluding overtime pay, are computed by dividing the total worker payroll by the sum of the total hours worked. Oh. Interesting. Oh, that's good. Okay. Okay, let me try to explain that. I wish I had the underlying numbers so I could just show the math of it. But simply put, well, let me see if I can get a trend of, what is this? The average weekly hours worked, all employees. Yeah, here we go. Let's get a line chart of that to see how much of a real impact that is. Oh, yeah, okay. Interesting. This is the biggest drop since COVID. Holy crap. Hold on, let me go back to like 2000. Wow. The only 2 times you've had a worse drop in average hours worked was COVID and the Great Recession. Holy crap. Okay, let's throw that on eHack really quick. Average hours worked per week. Okay. And throw this up. Remember, if you haven't yet seen eHack.com, I think y'all have seen it before. Do I need to keep pitching it? I don't know. You go to eHack.com, you see research and stuff we post. No ads, it's free. We're making an app. It's going to be cool. I think you'll all love it. I don't know. I hope you all do. And then that way, when you have an app, you'll be able to get custom notifications. You'll be able to get, you know, calendars and categories and I don't know, all the stuff everybody's been, quite frankly, complaining about. But anyway, watch this. This is crazy. So go to eHack, scroll down, look at this. Average hours worked per week. Right here. We're at the lowest level since COVID. And then before that, the Great Recession. So basically what they're arguing is that bad weather reduced how many hours people said they worked, which propped up how much they were getting paid because the pay stayed the same. You have to assume like salary workers get paid the same, but then they're working fewer hours because of the weather. So again, biggest drop since March 2020. Before that, 2009. And then bad weather blamed for fewer hours worked, which when you divide payrolls, mostly stable, thanks to salaries, by lower hours worked, you get higher wage inflation. So in other words, you kind of get a little bit of a Fugazi number for wage inflation, which is actually good because we don't want the potential for a wage price spiral. This idea of bad weather somewhat takes away the fear of a wage price spiral. You know, if that's true, who knows? It could be baloney. But it's also possible there might be some revisions to this. Okay, yeah, I believe that. Maybe because I want to believe that, but it also seems so ludicrous. But then again, you look at that drop in average hourly work week, and it's like, yeah, I mean, that's the last time we had drops like that. I mean, there had to have been bad weather in a January before. Was it really that bad? I don't know. But anyway. So, yeah, look at that. Qs keep going, folks. The Qs keep going. The SPY stays positive. New York Community Bank's trying to go positive. Tesla's trying to go even more negative. I mean, it's pretty much just the story of life at this point. It's like everything else green. Tesla negative. And then, I was looking for NVIDIA. There it is. Look at that. Holy smokes. Back to 250 over here. My lordy. That's wild. Absolutely wild. Okay, so now what we're going to do is we're going to take a look at some of the latest updates on the suits. And then we're going to go get another cup of coffee. And we're going to go to the course member live stream. If you're not part of the course member live stream, you know, make sure you do that. Join that link down below. This US SPY follow through the top side. Yeah, no kidding. Where are yields sitting right now? Yeah, same thing. Up about 13 bips on the yields. 2-year is, what, 17? 15 and a half. Okay. So, nope, nothing new there. We've covered that. Charter, they missed. I wonder how badly they missed. Let's see. Charter Communications, individual news. What do we got? Charter may face customer growth headwinds. Falls 13%. Extends drop after profit miss. CapEx lower than expected. Revenue at expectations, but EBITDA missed barely. Cites Disney as a model good for consumers. Interesting to cite Disney. It seems like if you cite Disney, you piss off like 50% of people today. Thanks, Michael. Appreciate you. Yeah, you know, Intel on the Ohio plant slowdown. I was really disappointed by that. So, you know, Intel's really, it was doing so well there. The trade was going great. You know, I got into this at like, what, I don't know, between 29 and 32. I can't remember exactly what it was. But anyway, yeah, it just got beat to crap after earnings and then the slowdown of the Ohio plant. So a little bit of a bummer there on Intel. So, wow. At the same time, you look at NVIDIA, 3%, Supermicrocomputer, 3%. Crazy. And it's so hard because it's like, you know, a lot of people are like, oh, yeah, rebalance into more of this. It's like, no. It's very, I think, very, very scary to cut losing bets in this environment to only go for the surging ones, because at some point things normalize. The problem is we don't know how long that is, right? The irrationality of markets can continue for a very long period of time. So that's crazy. So we'll see. But anyway, yeah. So I think I liked Esther George's comment. She's like, you know, they want to delay when they cut the first set, when they do their first rate cut. Here's crypto, by the way, Bitcoin. Because once they start cutting, they want to keep cutting. So it'll be really interesting. The NASDAQ is now, the triple Qs rather, now sitting. Look at this. This is crazy. It's up 1%. All right, we need to do our fundraise for House Hack. There's so many multifamily deals, by the way. Like, it's just a steal right now. So I think we might actually announce our fundraise next Friday, maybe Thursday. It'll be accredited. It's looking like we're going to call warrants, and then there'll be an opportunity for accrediteds to diversify to real estate if they want. So stay tuned. Obviously, and there'll be a prospectus and all that good stuff. Oh, look, even Tesla's trying to recover now. Yeah, look at that. An attempted little recovery there. Anyway, okay, I'm going to push the button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Hey, thanks so much for being here. Appreciate y'all. Meta is up 20%. It's just now hitting a red candlestick. Wow. Wow. Going over to the course member live stream to read some earnings calls and do some real estate. Bank Term Funding Program ends March 11th. See you. Oh, a bunch of interviews post this weekend. I'm going to go skiing, but I'm going to post a bunch of interviews. Valuetainment, Peter Schiff, Harry Dent, Peter Ong from X. I mean, like, really good interviews. So stay tuned. We got Hartman as well. Jason Hartman. Thanks, bye.